Hello and welcome. Thanks for joining us again. It's the March the 25th. Brent and I'm David. We're joining you to chat a little bit about what's on our mind, what we're thinking about. And Brent, the first thing I think on everyone's mind here at the end of March is the prospective plantings report. It's coming up at the end of the month, and the consensus or the AFN questions about this are at 92.5 million acres for corn, 90 million acres of soybeans. And so the consensus on corn, again, more than 92.5 million, is at 86% probability of that coming in. And soybeans, more than 90 million acres from that report, the consensus says 55% chance for that. So Brent, what are your thoughts and where you're thinking about for this report?
Well, it's really interesting. Most of the estimates that I've seen so far would suggest over 92 million acres of corn and soybeans to going to be awful close to that, 90 million mark, I think, is where most of them are coming in. My own forecast, I had soybeans at 65%, so I'm a fair amount above consensus on that one, and I'm also above on the corn. I was at like 80%. I'm below consensus actually on corn. I'm at 80%. So I think most of the participants are feeling, corn's going to be really strong, and I think that's accurate. 80% is pretty high probability, so I'm feeling pretty comfortable with that.
I think the hard part here is how do you get more than 90 and more than 92.5? How do you get over 182.5? I'm not saying it's not going to happen. I'm just saying that is itself a high bar to cross. And so I'm below 50% on the soybeans because I think corn is going to have some edge here, but the soybeans, I'm not sure how we allocate it among those two. Again, this is going back to what we talked about the whole time, is how do we get enough of both crops is a lot of times the latest. Brent, I think there's some late breaking news on CFAP 3. Is that what they're calling it? I don't know what the phrasing of it is.
I can't remember. It's CFAP, and if you remember, the stimulus that was passed before the new year had $20 an acre in it for row crop producers, and there had been some speculation that that may not happen, but it is apparently happening. So that will be more money out the door, more money for cattle producers as well, and a few other new additional monies as well, I think. So more government payments headed down the road here shortly.
So yeah, it's sort of in line with what we saw the February net farm income estimates, right? Those were a sharp declining direct payments, but still among the highest we'd seen in the last 10 or 15 years. So big changes, but still on the high end of the historical norm.
Yeah, everywhere you look right now, the economy is getting juiced. I mean, I honestly, it's like hard to find a spot right now where you go, yeah, that's underperforming, and even more fiscal stimulus thrown into the mix. We shared a couple really interesting articles. I shared it with David on email. Larry Summers had written a pretty interesting article, kind of a critique of the stimulus, and it kind of gave both sides. Some of the economists that are not as negative to it. So it seemed like everybody was saying, yeah, the economy is going to be good. That seemed to be kind of the consensus view. That it was just a question of, well, is too much stimulus really too much? And some people saying, yeah, we shouldn't do it, and others saying, it's probably not going to hurt anything.
Yeah, it was an interesting article to read. Now we'll include a link in the post on the website, but it was sort of the triangulation was interesting. They weren't really debating on where the economy is going to be, right? It was sort of what are the impacts going to be as we move ahead, and so it really was the question of, what might happen over the next 5 or 10 years, right? It was really what are policymakers going to do next, and will they be able to effectively make decisions down the road in light of what we've done in the last. And it's a very interesting debate. It wasn't one that there's a headline, and when I read the article, I'm like, oh, this is way more insightful than what I initially would have thought, because I think Larry Sumner's laid out sort of a 30% chance of this outcome, a 30% chance of this outcome, and a 30% chance of that outcome, which was really interesting to see him lay out.
Yeah, I think the headline was something like Summers says this is the worst fiscal policy in the last 40 years or something, or 50 years. Wasn't that the
Yeah,
gist of it?
yeah.
Which is interesting because he's obviously a Democrat. So it was just, I found it pretty interesting.
So also I'm gonna mention just a couple articles that we posted this week. Brent, I'll start this off, and you can talk about um, that one you wrote about the lessons learned. But we updated fertilizer prices. You should go read that article. We have a blog post going to come out about that as well. A couple headlines. I don't want to dive into the charts because I'll spend the whole time talking about it, but it's really a phosphorus story. It's the DAP prices are really causing a majority of I think the pain that producers are feeling. Anhydrous is up, nitrogen, phosphorus, potassium, they're all up, but it's really the DAP and MAP. If you're using the MAP, those have really gone up a lot, and they're really driving a lot of the budget changes. It's sort of interesting to see how that's playing out, but still a long ways away from those highs we saw back in 2011, 12, 13. But here's another one that I think is interesting to keep an eye on for the economy. Farm fuel prices, right? Last spring got below $1.50 a gallon in Illinois. Spent a lot of time around $1.60, $1.70, and now they're above $2.50. So this comes out of the same data set as the fertilizer, and we've graphed all the way back to 2010. Kind of the high era was somewhere around 350 back in 11, 12, 13. So a dollar, 250 today, 350 for that 10-year high. We also looked at all gas prices, and it's a very similar story. We had, 10 plus year lows, 10-year lows, I guess, last spring. And now we're looking at 5-6 year highs. We're still, so today we're somewhere around 275, a long ways away from 350, almost $4 a gallon back in 2011. But we've moved a lot. And it's kind of an interesting narrative. Trying to frame this up. We're sort of a little bit above pre-pandemic levels, but a lot above pandemic lows. And it's that a lot above pandemic lows that's, I think, causing a lot of the whiplash, and also double look at all the prices. And I think that's the same for fertilizer, right? When you talk about how much fertilizer prices have changed, it's different between fall lows and last spring prices. It's very important to keep that in mind.
Yeah, it really is dramatic how much they've changed. And yet, you still read a lot of stuff, and not as many miles driven, all this kind of talk out there. And the reality is the prices are shooting higher. So,
well, I mean, here's I'm showing the chart here of the West Texas Intermediate. Of course, that traded negative, right? And spent a considerable amount of time at $20 a barrel, then $40 a barrel, and now it's creeping up above 65. And we talked about that in the fertilizer article as well. These higher energy prices that we're seeing over the last month or two are going to start to impact fertilizer prices 6, 9, 10 months down the road, as the model we follow a lot shares that delay in the expectation, or that lag in the data. So Brent, I'll turn it over to you. Talk a little bit about some of these lessons that you learned from escaping 1980, sort of beyond the broader lessons, but a few that you just personally wanted to
right.
share.
So one of the things we did in the recap presentation that Sarah and David and I did, webcast, we started off with asked people to write, three things if they could send a message back in time to either themselves or to a relative. We asked them to write 3 lessons down that would help that person. And so I did that myself. It's kind of a compelling thought exercise, because what you don't necessarily want to write a note back and say, well, buy land in 1984 or 5 or something, but write down some lessons that are a little more durable. Because one of the things that we have to think going forward is the 1980s are never going to repeat themselves. That won't happen. It's not going to be an exact repeat. But are there lessons that we could learn from it? And so the lessons I came up with are, the first one is kind of use debt in moderation. And the whole point being that there are times when things go haywire, and if you have too much debt at the wrong time, it puts your business at significant risk. And so try and avoid being over leveraged for very long. A lot of times you have to, debt's kind of lumpy. You take on maybe a little bit more and work to pay it off. Just it's really hard to sustain a high level of debt. Another one was try to run counter cyclical to the crowd, and I think this is pretty clear in the '80s too. One thing is really important to understand is the difference between a demand shock and a supply shock. And supply shocks tend to be very short lived. Um, not, I mean, it's not to say it can last for a couple years, but they tend to resolve themselves. Demand shocks are a little bit harder. They take longer to resolve. And one of the things I think is helpful is to, you don't really know whether you're at a peak or at the bottom of the valley. Don't try and time it perfectly. Just try and, to the extent you can, at least be aware of what the consensus is and think of why it might be wrong. Um, and I think that's a useful thing to do. The other thing is to not underestimate the likelihood of extreme events, and this is something I think we as humans do all the time. Well, it was a 100-year flood. Well, maybe the 100-year flood isn't really a 100-year flood. I mean, we don't have that many years. It's not like we have millions of years of data on floods to know that with a high degree of certainty what a 100-year flood actually looks like. If you've only got 100 years of flood data and it happened once, it doesn't mean it's a 1 in 100 probability thing. And I think we tend to underestimate the likelihood of these kind of extreme events, the pandemic being one of them. They can happen without, very much warning, and you want to make sure that your business is resilient enough to handle it. In the 70s and 80s, there were the oil price shocks, and then the interest, inflation, interest rate shocks that really seem probably like 100-year events. And if you're not prepared to handle those, you can find yourself in a real tough situation. But at the end of the day, the best way to do it is be very efficient in your business.
So, Brent, I like a quote that you shared in the podcast, but also in this article is you can't be all in all the time. And I think that's really important to remember. But as you were sharing about 100, the 100-year event, there's sort of an interesting phenomenon, right? If you say it's a 1 in a 100-year event, it means that we kind of trick ourselves into thinking it happened once in my life or 0 times, right? Like it's like in how many once in 100-year events can you have in your lifetime, right? So maybe there's a flood, or maybe there's a fire or a drought, right? And you're like, oh, we think that we'll only have one of these 1 in a 100-year events, right? But like a 1 in a 50-year event would be like twice in our life, and a 1 in 30-year event might be more than 3 times in our life. And so it's really interesting. 1 in a 100-year events really messes up our thinking, I think, a lot, right? We don't think about that, especially when we don't think about how that's a very narrowly defined probability, right? It's what does even a 1 in a 100-year flood mean? We should go do the research on this. And what does that really mean? It means this river in this area, it's only going to get to this high at this point. And I don't even know exactly how that comes together, but you have to be careful, right? What does a 1 in a 100-year drought look like? Well, you can have several severe droughts, and they all take on different shapes and forms, right? Sometimes they're a flash drought. Sometimes they're, there's hydrological droughts versus agronomic droughts. It's a very, we're going to in the weeds here a little bit, but the idea is consistent is don't let this idea of 1 in a 100-year event fool your thinking, right? Don't let you get complacent about all the risks that are out there. We fool ourselves, I think, a lot by trying to quantify all the risks, but yet we don't leave space for unknown unknowns. We don't leave space for these things that we don't know they won't occur, or that we don't know the true frequency or the true randomness or probabilities associated with them.
Yeah, and I think the '80s are a great example of that. Who it's hard to say, you sit there and go, well, the grain embargo was a pretty random external shock. But if you really think about it, the we had tremendous trade tensions with the Soviet Union at the time. To think that they wouldn't get into some kind of a geopolitical spat that might involve trade is probably naive. So
Well, at the same time, we were building nuclear bomb shelters because we thought we were one side was going to blow the other side off the map, right? So,
yeah,
not to interrupt you, but yeah, it was kind of naive to think that was a black swan event, to use a common phrase.
yeah, and that's and the fact that that phrase is so common now tells you that what you're talking about really aren't black swan events. They're just things that happen, probably much more likely than we think they will. And the other thing is, it's a joint deal. So individually, they may be low probability events, but if you have enough of them happen at the same time, the systems can be very complicated.
So one last idea. I think we're getting a little long here, but we'll capture it. I want to throw it in here. Um, so Brent, I want to set this up, and I already told you the answer, but I want to set it up here. So all the listeners can share their expectations. So which of the two scenarios that we outlined do you think is more likely to occur? Which is more probable to occur? A, corn yields in 2021 come in below trend. Or B, all the dryness and all the drought that we've seen in the southwest of the United States intensifies, it expands, and it causes severe yield losses and corn yields fall below trend in 2021. So A or B, which one seems more probable or more likely? So Brent, I'll take a stab at explaining this, and you probably have a more eloquent way of describing this. This is what they call the Linda problem. So Danny Kahneman, I think, stumbled upon this, and A, right? A is the more probable event, but B is what we often select, and this is called the Linda problem because they asked all these college students, which is more likely to be true about this fictitious person they named Linda, and what they found is that when there was a narrative associated with this, people sometimes got caught up in the narrative, and the narrative sort of confirmed their bias, and it took all these ways. So thinking about the yield one, there's like a Venn diagram, right? Or a circle of all the ways that yields can be below trend. And the B is a subset of all the reasons why A can happen, all the reasons why yield can be below trend. So there could be a lot of water, there could be a drought in the east, there could be a drought in the south, but I told you about a drought in the west expanding and intensifying, and that is a subset of all the possible ways corn yields could be below trend. And the reason why I bring this up is because I think my bias is that our human brains aren't very good at sifting through narratives and stories. We fall for a good story about every time, and this is an example of how a story can impact our thinking when we need to step back and say, okay, there are actually a whole lot of reasons that we have below trend yields in 2021. Let's not get too focused on this one narrative and let that impact how we think about the probabilities of all possible outcomes.
Yeah, it's setting up the specific scenery and scenario oftentimes gives a greater sense of precision, and it's falsely encourages us to believe something's more likely than it probably is. So I think it's a really good example, and something that's really important just in your thinking to remember, think through all of it. How much of this is story that's influencing my perception of the situation?
So now that we share this with you, I actually think this could be a scenario for 2021 because of the drought that's out there, right? We've been worried about this drought for a long time, and now you can see all the marketing narratives that are going to start to come forward from that. So anyway, it's called the Linda problem. You can Google it. Again, it comes out of Danny Kahneman's work. So that's all we have for this week. Thanks so much for joining in. Hoping everyone's having a successful spring so far, maybe get some field work done. We'll catch you all later. In the meantime, stay curious.